Major moves. We going all in, like we got nothing to lose. We making moves. We making major moves. We making moves. We making major moves. We making moves.
Welcome back to my channel. I want to thank you guys for actively deciding to spend time with me. I'm just a guy in a Spider-Man mask, a cool one I might add. I'm not a financial advisor. I'm just providing information and content already on the internet, and I just read it and present it to you guys in a way that may reach you or may not reach you. Whatever the reason is you found my page, I'm grateful you're here, and thank you for spending time with me. Let's get into this.
What is up, everybody? I am Mr. Man, and I came to bring the fire today. I got a Mr. Man exclusive for you guys here. This is the first time I'm hearing about them and just reading about them now. And I want to share my findings with you guys. Why? Because I think you all deserve it. So let's just jump right into it. This is an organization, obviously a think tank or an organization type of individual known as the FASB. Financial Accounting Standards Board. Makes sense that there's a board. And they were established in 1973. The FASB is the independent private sector not-for-profit organization based in Norwalk, Connecticut that establishes financial accounting and reporting standards for public and private companies and not-for-profit organizations that follow generally accepted accounting principles. Awesome. So now that we have an understanding of that, this is Mrs. Hillary H. Sallow, the Technical Director, Chair of Emerging Issues Task Force. I want to introduce you to who she is. I'll let her do the talking for me.
I really wanted to become the FASB's technical director, most importantly because I believe in the FASB's mission. I actually started my career as a postgraduate technical assistant at the FASB. So for me, it's been especially rewarding to have the opportunity to come full circle and lead the staff of the organization that really shaped my career. Every day, I learn something new, or I better understand an issue from a different perspective. And I really give credit to our stakeholders for so actively engaging in our process. So when it comes to our priorities over the next few months, I would really break it down into 3 different buckets. One, we have a focus on our agenda consultation process that's ongoing. Here we're really looking for feedback from stakeholders with regards to what are the projects that should be priorities for the FASB in the next few years. So as part of that, we're looking to issue an invitation to comment later this summer and really looking for our stakeholder feedback related to that. Secondly, we're focused on our post-implementation review process related to revenue, leasing, and CECL. And thirdly, we're also taking a look at our existing agenda and really determining clear paths forward to complete many of the projects that are on our agenda today.
Perfect. So that gave us a quick summary of who she is. I let her introduce herself like all the other panelists do when you watch these crypto forums and whatnot. So, not long ago, in June 26th, in March 23rd, 2023, the FASB had put this out here. The exposure draft, proposed accounting standards updates for intangibles, goodwill, and other crypto assets. And that is subtopic 350-60 accounting for disclosure of crypto assets. And here's the name right here, the technical director file reference number 2023-ED200. That's the file we want to find. All right. So as we go through that, we see Grayscale responding to that. Look in the top right here. I'll blow it up here for you guys right there. Right there. 2023 ED200. Comment number 50. There is Grayscale responding to them here at the FASB. Responding to them. We also have EY responding to them. They have the letter right here under the reference number. You can see it there. All right. Looks like we got ISDA up on here too, responding to that there. You can see the top right corner right there, comment letter number 43. This is also addressed to Hillary Sallow. This is Sallow. We got Citigroup here at the top right corner again, right there, with regards to the same thing, crypto assets, file reference, proposed accounting standard updates, intangible goodwills and others, crypto assets. We have an interesting one here. This comes from California, 32nd District, the Congressman Brad Sherman. I will read this one for you guys. This one's a short one. It's only 2 pages. I write today concerning FASB's proposal to require the aggregate amount of in-scope crypto assets be presented separately from other intangible assets on a company's balance sheet. I urge the FASB to promulgate a clear accounting principle that cryptocurrencies and other than tokens and stablecoins, to the extent that they are fully backed by the US dollar or other major world currencies, should not be on the balance sheet. Why? What's the gain from that? Why don't you want them on the balance sheet? The last 6 months, from the collapse of FTX to the failure of banks like Silvergate, Signature Bank, has demonstrated the inherent risks that digital assets possess, and the significant weakness that the crypto industry and those industries associated with cryptocurrencies face. Cryptocurrencies remain highly volatile and speculative wagers that are subject to rapid and highly unpredictable price swings, which in turn make it difficult to determine the fair market value or to estimate potential losses associated with the cryptocurrencies, and any value is temporary and speculative. The conclusion of such volatile cryptocurrencies on a company's balance sheet can make financial reports and assessments regarding the crypto financial health misleading to investors. Okay, I do support FASB's proposal to require entities to recognize transaction costs expended to acquire crypto assets, such as commissions and other fees, as an expense incurred. With this in mind, I strongly encourage the FASB to adopt a clear accounting principle that cryptocurrencies should not be on the balance sheet, and that amounts paid to acquire cryptocurrencies should be charged to income as an expense. So it's just an expense, not as income when you have gains at that point. So it's not even on the balance sheet. It's just as an asset on the side, and that's the end of it. Whether it moves up or down, it's just on a side asset. That's an interesting concept. Thank you for your attention to this matter of timely importance of our financial system. Cool. We have the digital chambers of commerce replying there too, up in the top right corner there. See that? We have Propeller Industries. Don't know who these guys are. They just caught my attention because propellers. I figured, there's got to be an aviation company here. Nothing reads as aviation yet, but I can't see what else propellers would be. And then we have Ripple. They also replied. And this is the creme de la creme of what I want to stop and read today for you guys. Not all of it. This is 10 pages, but just enough. Dear Miss Sallow, we appreciate the opportunity to share our comments with the FASB and its staff members on this proposed accounting standards update, from the perspective of both as a private company preparer and an active participant in the digital asset space. Doesn't matter when they were founded. They're talking about leveraging XRP to bridge two currencies, ensuring global payments are sent and received in local currencies on either side of the transactions. The underlying technology, okay, is that what I want to read? Okay, is ubiquitous, driving force of all, no, I was just talking about, okay. Will continue to reshape the way all industries conduct their businesses and act as a powerful growth engine for decades to come. While we appreciate and commend the board's work in proposing a clear and operable set of rules for this narrow set of crypto assets, we also recognize that by scoping out certain crypto assets, it will inherently lead to diversity in accounting practices and disclosures for the out-of-scope crypto assets. As such, we urge the board to continue its efforts in developing a comprehensive and flexible, for example, not one-size-fits-all accounting framework for the ever-expanding universe of crypto assets, factoring in the respective holders' differing business purpose and use case that best reflect its economics to drive appropriate accounting treatments, consistent and comparable disclosures across the entire industry. During our review of the proposed scoping criteria, we appreciate the board's consideration of excluding issuers, creators, as we agree that certain crypto assets created and held by issuers, creators may have a different use case than other holders. That makes sense. That makes a lot of sense. So you and I holding crypto assets, but they're talking about specifically about creators of crypto assets. So you and I holding crypto assets now, we have a different use case than say Ripple or Stellar holding cryptocurrencies, but they're more focused on the fact that they created and now they're holding it. Like they got 50 billion locked up in escrow. Stellar they burnt their 50 billion, I believe it was. Okay. Consequently, the fair value measurement would not be appropriate in these cases. However, we would like to remind the board that a blanket exclusion of crypto assets created or issued by the reporting entities, that would be Ripple or Stellar or any individual that's a crypto company and they're reporting their crypto assets or its related parties, has potential major unintended consequences. Scoping criteria as written effectively excludes a significant population of companies that underpin the digital assets ecosystem, over 25,000 cryptocurrencies in existence to date per coin market cap. Unbelievable. That's going to disappear soon. Moreover, and then it'll grow again. It'll disappear, deflate, and then grow again. Once regulations hit, a lot of these companies now that had no intention to adhere to regulation disappear. The 25K is going to shrink. And then you're going to see the exponential growth of companies coming out and coming out and coming out at that point. Ones that adhere to regulations and want to adhere to regulations and are now catching wind and attempting to adhere to regulations. Moreover, it places undue emphasis on the crypto asset holder's business involvements and relationship status, which could be highly circumstantial and never evolving. A prescribed outcome solely based on holder status not only introduces operational challenges, the measurement method also may not fairly represent an entity's crypto asset activities, as it disregards the source, nature, business purpose, and use case of the underlying crypto asset. We strongly urge the board to consider using the business purpose and use case of crypto assets holding as the determining factor in deciding whether it qualifies for the scope of the proposed ASU. I'm not sure what ASU means, but what Ripple is suggesting is that they create their their accounting implications based on the individual's crypto's use case, as opposed to lumping them all in together and saying, well, this is a crypto asset, this is how it's going to be treated. Not one size fits all, as it said in the previous page. So they're suggesting that the use cases of crypto have the accounting methods be attached to that, depending on what it actually does. One possible way of achieving this is to refer to the source, for example, the transaction history or origin of that crypto asset, of the crypto assets obtained. This way, it would naturally encompass all entities, including but not limited to token creators and their related parties, who each may acquire the crypto asset at different times under different terms and conditions. Specifically, we believe that a crypto asset obtained that has never been used in a transaction in an orderly market should be kept at cost less impairment, thus scoped out. Ripple actually holds XRP, 50 billion XRP in escrow right now, and that incurs a zero cost on their balance sheet. Reason it incurs zero cost is because that XRP was gifted to them back when Ripple Labs wasn't a thing, and before XRP was known as XRP, but back when it was known as OpenCoin. Then Jed McCaleb, Chris Larson, Ryan Fogel, I believe it was, founded the Ripple Labs at that point, OpenCoin was gifted to Ripple Labs, rebranded as XRP. XRP was a free gift to Ripple Labs, so now XRP holds zero balance on their balance sheet. And that's what they're suggesting right here, that it remains zero balance on their balance sheet. Because at that point, I'm not sure what the implications could be. However, it would show that they have significant holdings or assets under management at that point, depending on what the cryptocurrency or XRP's value is at time of reading this, at time of writing this and sending it, and later on in the future. I'm sure there's going to be huge implications for that. So, we believe our revision is easier to implement with less unintended consequences. As such, we would greatly appreciate the board's careful consideration. For further details, please refer to our response to question 1 below. Here's their response. I'm not gonna go into that, but I wanted to get this out to you guys there. I wanted to show you this Mr. Man exclusive. You're not gonna find this anywhere else. I posted this on my Twitter 20 minutes ago, and I wanted to get this out on my channel because you guys deserve it. You guys, this is the best community ever. I'll see you guys on the next one. Nothing but love.
Making major moves. We going all in. Like we got nothing to lose. We making moves. We making major moves. We making moves.